I'm happy to call on stage the first set of panelists. So we have Julie Fionda from the European Commission. Please, Julie. And then we have Elodie Donjon from our investment team. And then we have Antonia Botsari from our research team. And the panel is about, indeed, the skills gap problem and market players' perception. And we'll start with the presentation from Antonia about how the research of the EIF applied to the field of venture capital and private equity has been important to identify what is the skill gap and what are the skills maybe that are missing. So in a nutshell, how the human capital dimension, it is linked to the implementation and the performance in the venture capital and private equity field. Antonia, over to you.
Thank you, Sylvia. I'm very pleased to have the opportunity to share with you today a preview of EIF's forthcoming report on skills and skill gaps in the European VC and PE markets. The results are based on our equity surveys. This is a project that started back in 2018, just with a VC survey at the time. We typically run the surveys once per year. These are online surveys conducted on an anonymous basis. We try to address the entire VC and PE markets on a pan-European basis, and hence we survey both EIF-supported as well as non-EIF-supported fund managers. We cooperate with key stakeholders, such as Invest Europe, to enhance the survey outreach, but also with academic researchers to ensure high-quality standards in terms of the survey questionnaire, but also in terms of the survey-related methodologies. We achieve a high coverage of the underlying survey population, enabling us to retrieve unique market insights. And indeed, to the best of our knowledge, the combined VC and private equity mid-market surveys represent the largest regular survey exercise among GPs in Europe. The latest survey wave was conducted in the summer of 23, and responses were received between mid-July and early September. As you may see, almost 700 fund managers across Europe from both asset classes contributed their views. Given also the fact that we target the more senior people in the respective VC and PE firms, these views capture the opinions and perceptions of the real decision makers in the participating firms. We see no surprising results regarding the investment stage focus and the sectorial focus of the respondents. And in the forthcoming report, and in your bag, you will have the QR code for this forthcoming report. You will find a rich analysis of the sample demographics in terms of the respondents' human capital, but also in terms of the investment preferences and characteristics of the respective VC and PE firms. So why did we decide to focus on the topic of skills in the 23 surveys? Not only because we were in the European Year of Skills, but if we look at the main challenges for the VC business altogether, and in the interest of time, I show here just the results for VC, but similar patterns emerge in the case of PE mid-market too. So for years, VCs have been telling us that the number of high-quality entrepreneurs represents an important challenge for the VC business. By contrast, the lack of skilled workforce at the VC firm level is not seen as a big challenge. This indicates the presence of a highly skilled professional workforce in most of the respondents' VC management teams. And actually, this result is consistent with the results on the respondents' human capital that we observe in the survey, whereby VCs are highly educated and experienced investors in terms of both the years of experience in investment-related activities in VC, but also in terms of the number of signed VC deals. If we now turn to VC portfolio companies, there too we see that recruiting high-quality professionals is a key challenge for VC but also, like I said, for PE-backed companies. And in fact, in the years before the war in Ukraine, this was even the first most important challenge for portfolio companies. So in light of these recurring results in the surveys across the years, we wanted to look deeper into the topic and ask which skills are considered as most important, both for an investor team as well as for the management team of portfolio companies. Do the teams possess the skills perceived important, or are there instead skill gaps identified? How are these skill gaps addressed? Which skills will be in most demand in the near future? And how do the skills and skill gaps in an investor team and in a portfolio company team interact? And I will be touching upon these questions in the following slides. At the level of the investor team, for example, by a clear margin, almost 1/3 of VC and PE mid-market fund managers identify a gap in relation to sustainability-related knowledge in their respective teams. This is followed by STEM skills, indicated by almost 2 in 10 respondents. With regard to the means to fill these skill gaps in the investor team, both VC and PE mid-market fund managers mention training, and this is captured by the pink color in the graphs, as the main means to fill soft skill gaps, for example, in leadership and people management, problem solving, communication, negotiation, and strategic planning skills, as well as sustainability-related knowledge gaps. By contrast, new hiring or outsourcing is used to fill gaps arising from industry knowledge, legal, and STEM skills. Turning once again to portfolio companies, leadership and people management is largely missing in VC and PE-backed firms and represents the first most important skill gap. For VC fund managers, the second most important skill gap concerns selling and pitching skills, while for PE mid-market fund managers, it relates to strategic planning. Another interesting finding is that private equity mid-market fund managers, more frequently than VCs, also indicated a lack of sustainability-related knowledge and skills among their portfolio companies. In the remaining slides, I would like to tease out interactions among the skills-related questions in the survey, based this time on the pooled sample of both VC and PE mid-market respondents. For example, in this slide, we show on one hand, in blue color, the percentage of respondents perceiving the skill as important in the future when the skill is currently missing at portfolio company level, and on the other hand, in pink, the percentage of respondents perceiving the skill as important in the near future when no such skill gap is currently identified at portfolio company level. In orange, we show the difference between the two groups of respondents, and we indicate with an asterisk whether this difference is significant also from a statistical point of view. We see that the reported differences in the graph are always positive and statistically significant, suggesting that fund managers assign higher future importance to a skill for the management team of their portfolio companies when they identify a gap in this skill at present. And this is particularly true for sustainability-related and STEM skills. Next, we ask whether the skill gaps identified at investor team level are different from those identified at portfolio company level. In most cases, again, the difference between the two groups of respondents is positive and significant, implying that fund managers identify or seem to identify greater skill gaps in the management team of their portfolio companies, while they perceive their own investment teams to be more endowed with these skills. There are, however, a few exceptions, notably with regard to sustainability-related and STEM skills. This is where the difference between the two groups becomes negative. Fund managers perceive greater skill gaps in their own teams. a similar type of analysis by comparing, on one hand, the percentage of respondents perceiving the skill as important for the management team of their portfolio companies, and on the other hand, the percentage of respondents perceiving the skill as important for their own investment team, reveals that for most of the skills considered, their perceived importance at investor team level is higher than their perceived importance at portfolio company level. This echoes the results we discussed just before, whereby fund managers perceive their own teams to be more endowed with the skills, and hence they might in turn consider it less important for their management team of their portfolio companies to possess the same skills. By contrast, industry knowledge and leadership and people management skills are perceived as much more important for portfolio companies. This again echoes another finding in the surveys, whereby the management team of potential portfolio companies is fund managers' first most important investment selection criterion. Also, jointly analyzing skill gaps in both the investor team and in the portfolio company team enables us to define what we call clusters of critical skills. For example, in the upper left-hand quartile in pink, we see the skills that are critical for the investor. And why we define these skills as such? Because for these skills, we observe a higher than average skill gap in the investor team, but not in the portfolio company team. Hence, for these skills, such as sustainability-related, STEM skills and industry knowledge, portfolio companies will need to be on average autonomous and self-sustaining. By contrast, in the bottom right-hand quartile in blue, we classify the skills that are critical for the portfolio companies, because for these skills, for example, for leadership and people management, for strategic planning, or for communication skills, we observe a higher than average skill gap in the portfolio company team, but not in the investor team. So we could argue that these are the skills for which fund managers can support and provide value added to the portfolio companies. So, like I said, you'll find all of this analysis and many more in our forthcoming report. We expect this to be out in the course of next couple of weeks. It's now in the final editing phase. We hope you'll find it an interesting read. And on my side, I would be happy to take any questions during the panel or later in the day. And I would like to thank you very much for your attention.
Thank you very much, Antonia. So let's then start the first round of discussion. Elodie, well, we have been colleagues for quite some time, right? And you have indeed a long-standing experience in the investment industry. And I would like to ask you maybe to give us your personal reflection on the findings that Antonia shared with us. And since you're basically screening on a daily basis a lot of proposals, do you see a correspondence, or what's your perception about it when it comes indeed to the human capital dimension?
Got it. Good afternoon, everyone. So indeed, I'm an investment manager, part of the equity investment team. I've been screening fund proposals for almost 13 years now. And a lot of the findings from the study actually reflect very nicely with what we see. So I will speak about two levels. The level of the fund manager, first of all, which is the one we are closest to. And there, obviously, we pay a lot of attention to the skill set that the fund managers have to bring on board when they want to deploy a specific strategy. So let me take an example. We see a lot of climate tech proposal nowadays. Climate and sustainability, as you've already heard many times today, is a very important topic across the investment market. When we look at a fund manager wanting to invest in climate tech or climate hardware type of investments, obviously we will expect in the management team someone with some engineering expertise, someone who is an engineer who can actually speak the language of the entrepreneurs that they will support. So I think at the level of the fund manager, from our portfolio, because it's an area of attention of our due diligence, we ensure that our fund managers are equipped with the skills that they need to deploy their strategy, and hence I think it resonates nicely with the findings of the study. Now, when it comes to the portfolio companies, I think there's a lot of studies and a lot of data on the market, but one that actually caught my attention was from the European Commission that says that 3/4 of European companies are facing issues with recruiting skilled staff force, and that only 37% of employees actually do trainings in the course of their working life. And this we see also in our portfolio companies. So indirectly through our fund managers, it is very clear that there is a shortage of skilled workforce, that they really struggle to find and build their portfolio companies with the necessary skills that will drive the success of the companies. And it's even more critical when it comes to sustainability. So there's the so-called green skills that are evidenced as a high shortage. So just for everyone to have the same definition on our end, we assess the green skills as any skill that is necessary to ensure the sustainability in the economic operation of the companies. And I think currently we need an army of people who will have these skills to be able to make sure our economies are actually sustainable. Today, there is definitely an issue between the trainings that are provided in terms of sustainability. There is an issue with the skills that are at the level of the entrepreneurs and of their companies to ensure that sustainability is on the mind of everyone at every level. And I'm not just talking about engineering. We're talking about green finance. We're talking about architects. We're talking about every level of the value chain has to think about sustainability. And it is true today that this is clearly an area where we need to do more.
Thank you very much. Actually, some food for thoughts on which I would like to elaborate later on during the event. Now, let's move on with Julie. And Julie has been instrumental for all the activities that indeed the EIF has been launching in cooperation with the Commission. But her responsibility, of course, goes beyond that, because you are in the team that is responsible for the entire skills agenda. So, and maybe you can give us, Julie, an overview about the different policy actions that the Commission has been implementing over the past years. And if also you find like some actions that are also relevant specifically to the findings that Antonia has been sharing, would be nice if you can highlight those. Thank you.
Thanks very much. Thanks, and I think my wrinkles and my grey hairs are getting more and more by the day with this skills charge. So I think we maybe taking slightly from a different perspective in terms of looking at the labour market as a whole across Europe. It's clear that there is a high degree of diversity in what are the skills needed. And it kind of makes sense that labour markets are regional. The labour market of the south of Germany is not the same as the labour market of the south of Portugal. And therefore the skills needed are very much in function of what regional characteristics are and also what the sectors which are prevalent and the ecosystems in those areas. So I think that's probably the first point I'd like to underline. One of the key points for us is that if we look across the board, around about half the labour market is at what we would call intermediate skills level. So it's jobs that probably do not require a university level qualification, but they do require a high degree of skills level, but something in between. And if I look at what for us is probably the main source of intelligence on what are the skills needed across Europe, and again with a caveat that it's all very regional, so whatever I can say at the European level has to be couched. if I look at the top 10 skills where we face the most problems, 5 of those are in construction trades. And it's construction trades like bricklayers, carpenters, etc. So there's a big demand at the medium level. So more than half of the 10 shortage occupations in the EU today are in those kind of areas. Also a big shortage in lorry drivers. Huge shortages in lorry drivers. So I think we kind of have to look a little bit more broadly in terms of what the labour market itself is requiring. And those are important trends, perhaps. Also bearing in mind that, we're losing people. We're not, the demography of our continent is not positive. Every year for the next foreseeable future, we're going to lose about 1 million people from the labour market. And that's a labour market which is about 250 or so million people. So it's a big loss. And so apart from the skill shortages question, there's a labour shortages question which needs to be considered, I think. What are we doing there? We're also putting in place things like cooperation initiatives to try and understand what are the skills that are really the ones that are in need, and how can we develop the solutions to plug those gaps. Initiatives like the Pact for Skills, which some of you might have heard of, which is basically it's a public-private partnership initiative, whereby enterprises come together with others to look at the skills needs in the 14 industry strategy sectors. So these are the sectors that we've decided for Europe are key to our growth and competitiveness. We also have set in place something called the individual learning account, because if you go to the average person and you say, well, you have to train, you say, well, yeah, okay, why? And what's it for me? What am I going to get out of this? So you have to stimulate also the motivation of people and the engagement of people individually to actually get involved in training. And these individual learning accounts, whereby around about 15 member states in Europe are now experimenting or introducing these individual labour accounts, will put in place a kind of backpack of money, essentially, and perhaps time off work, that you can spend on training, and a registry of trusted or quality training that you can spend your money, annual allocation from the state, essentially, on. So I think that's kind of one of those things at the systems level where we're experimenting with.
Thank you, Julie. And if you allow me, I would like to ask you a follow-up question on this. That is, how do we ensure that all different initiatives about skills, like, for instance, we have given indeed with Antonia and Elodie an overview about the venture capital and private equity, but as you rightly said, we need to broaden our horizon in that respect. How we can keep all together, like all these different work streams and individual initiatives?
I think that's the $60,000 question, as they say. It's not easy, and I think what we can try to do is produce more transparent and more easily understandable and usable skills intelligence, for example. And that's why we are working together with and investing in the public employment services of Europe, which are key actors in the member states and in regions, to be able to have what are the key trends in their area, so that they're providing the right advice, and also so they're commissioning the kind of training that will help people get into jobs and good quality jobs.
Thank you. Elodie, do you want to comment on that?
No, I think it's a tough one, because it doesn't have one answer. And there's so many actors in the overall skills. I mean, it starts from preschool, from kindergarten, all the way to what you learn in school, and then what do you do when you are actually working? How do you upskill yourself, or how do you reskill yourself? I mean, I'm old enough that I've seen friends getting trained on jobs that will not exist in the coming year. So what do we do with that. So I think it's a huge problem that has also many solutions, which the Commission can bring its angle. The VC ecosystem can also show some solutions on its front. So it's really everybody pushing in the same direction.
And I'd like to pick on the word on which I very much agree with Julie, the transparency. And next to transparency, I would like to place the word data, right, Antonia? And often on the EF side, we launch indeed research projects because only with data and empirical evidence we are able then to design specific targeted instruments. So Antonia, I would like to ask you, what was the rationale for you as part of the research team at EF to incorporate this human capital dimension in your traditional survey, in this case vis-a-vis venture capital and private equity funds, but I must say also more broader across our financial intermediaries? And second, what do you think we need to still do in this area to bring, let's say, more data and transparency, at least when it comes to the financial instruments that EIF is implementing or can implement in the future?
I very much like this idea of evidence-based policy interventions, and indeed this is what we are trying to do at the EIF, because it's one thing, let's say, having receiving the anecdotal evidence from the individual discussions from with fund managers, and it's much more powerful to be able to back this up with the views from the market, or as we saw with the views of 700 fund managers converging in the same direction. Regarding the skills topic, for example, and human capital, I showed in the presentation a couple of slides, and we have been receiving these results on the business challenges at the overall VC or PE level, and also for portfolio companies. We had been receiving these results for years, and before the recent crisis, the importance of these challenges was even higher. So we wanted to listen to the data, because it's a survey, so it's a live sample in a way, and we wanted to listen to what fund managers had been saying and see where exactly these difficulties lied, and what were the skill mismatches or skill gaps that needed to be addressed. And for example, now in all commercial databases, you may find the CVs of fund managers, so it should be relatively easy to come up with the typical profile, for example, of a venture capitalist. But I think what is even more important, and this is something, a topic on which research is very limited, is on exactly the topic that we've been discussing in the panel. What are the most important skills now and also going forward, and do the teams, investor teams, portfolio company teams, possess these skills? And I think education has an important role to play there at the early stages. For example, how to address the barriers preventing young talent from developing the necessary skill set. And I very much look forward to the discussion on student financing in the afternoon. In our team as well, we are undertaking a study on student lending, mapping the situation and the initiatives across Europe, but also education in later stages, as was mentioned by Elodie, the concept of upskilling, reskilling. And staying on the human capital, if we take a step back and think of talent in a broader sense, and now we'll refer to a topic that I know is also very close to your heart, the gender topic. What are, for example, the barriers or biases in that case that prevent qualified females from entering the VC and PE market? So I would if I were to say three dimensions on which more things need to be done, I would say the data to inform the policy interventions, education, and a change of mentality, because it's not only the financial barriers, but also the mental barriers and the biases that may create issues.
Thank you very much. And I would like to say that also with the financial instruments dedicated to skills and education, actually for the first time the EIF is also addressing the segment of students, of course indirectly based on our model, but before we were focusing exclusively, let's say, on the entrepreneurial side, so on the small businesses. Now we have basically placed the intervention also at the very beginning of the value chain. Now, we will hear later on a presentation on InvestEU that has different instruments to address or to support investments in this field. But I would like actually to pick on Elodie's experience, because it is true that only with the InvestEU, let's say, we have specifically spelled out this education and skills area, particularly on the equity side. But in reality, via our investments dedicated to the digital activities or to the social impact activities, we have come across investment strategies that will support entrepreneurs or startups in this field. And I would like Elodie to give us an overview about what you encountered in the market and how these type of strategies have evolved over time.
Yeah, very gladly so. Education has always been a topic of investment for our funds, whether it's private equity, whether it's private credit, or whether it's venture capital. I think definitely COVID has put edtech on the map for our VC fund, because from 2020 and 2021 onward, we saw a major increase of the focus on edtech. I think about now we have about 250 portfolio companies that are in the education field, so all the way from a very traditional education model to edtech, digital type of model. 2/3 are in the VC space. The rest is split between private equity and private credit. So there you will find more stable and more mature model. We have about 1.9 billion invested in all of those companies, and that's about 150 funds that are targeting education as one of their investment focus. When I started to prepare for this conference, I was thinking that I was expecting the bulk of the activity to come from the social impact funds, because definitely educating better, making sure that those unemployed have the skills to re-enter the employment market is definitely something that our impact manager love, is very dear to their heart. So I was thinking, okay, the bulk is going to come from there, but actually it's not true. 2/3 of our portfolio is from edtech, generalist tech funds who try to find also digital solution to the skills issue. And yeah, I think it's a mixed bag of different profile. What I really like about our different strategies is that from the generalist tech funds all the way to social impact funds, all the way to social outcome contracts, by the way, which is not such a big market, but does have the capacity to bring innovation in public sectors that are not able to innovate. Education really is a very important very important theme of investment.
Thank you so much. And that also reinforces our idea that indeed we do not focus on silos, but we rather see the investment in this sector as a cross-cutting objective. And if we are able indeed to catalyze, because that also the EF role, to catalyze private investments, both on the social impact side, but also on the side of generalist digital investment for the purpose of incentivizing investment in skills, the two forces combined are, of course, a better, let's say, outcome for the sector. And I would like now, thank you very much, Elodie, and coming back to Julie, we hear like different perspectives, and if we combine all of this, what is your wishes or expectations, let's say, for to support further the different area on the skills shortage, but also on the employment shortage, as you mentioned? I know that now we are in a peculiar time with the upcoming election and all the political context, but based on what you have observed and the fact that there is no way back, actually there is only a way forward to support this transition. What is your wish for that?
I suppose if I would have one wish for Christmas, it would be that we recognize skills more, and by skills I mean kind of the initial stuff through education, but also the up and reskilling later in life as people increasingly will need to reorient, that it's more recognized as an investment and not a cost. And I think it's in that frame, I mean, in our view, and that's where we've tried to center it, both in things like the European semester of economic policy coordination, the fact that people are our most precious asset, and people drive productivity. And so we need to invest more in the skills of people on a continuous basis. I mean, that we have this headline target, which is 60% of people should engage in some kind of training every year. So more than half of the people in this room should be training in something every year. I mean, that doesn't mean that you have to be spending, months and months in a training course. It might be a short focused online course. It might be something very specific to your work. But we need to move that dial. Currently the level is about 39%. We need to go up to something, because the challenge is huge. And if we see the flow coming from initial education and training, and then colleagues in education will know better than I, the results of things like the OECD's PISA is looking very worrying for the flow of younger. Not only are there fewer younger people coming into the labour market, because there are fewer younger people, full stop, but also the skill sets that they're emerging from, the basic stuff, literacy, numeracy kind of stuff. It's worrying. And it's getting, in that sense, the trend is going in the wrong direction. And in Europe, we still have a huge untapped potential. If we go back to the gender question, many women are not able to play their full role in the labour market. The same with many young people who are not in education, employment and training. And we need to do something about that. And I think just kind of one final point, I suppose, it goes back to this question of how can we make more of those arguments that persuade to people, but also to other actors, whether they're governmental or whether they're private sector, that investing in skills is an investment that pays off. And that's why we've also included in the Corporate Social Responsibility Reporting Directive stronger references to skills reporting, employee training. And that's also why we're doing a study now, which will conclude end of this year, beginning of next, on accountancy standards. So can we get more transparency, more acknowledgement into what you spend, because you can't value what you can't measure in that sense.
Absolutely.
So hopefully this will make a contribution to be able to measure a little more.
Fantastic. I really, really much, I really like your wish, like investment in skills is not a cost, but is actually an investment for the future. And just I quote from the Enrico Letta report on the single market that has been issued last week, who says, going forward, the digital transformation of Europe's economy and the empowerment of local communities as engines of economic growth demands significant investment in infrastructure and digital skills, but I believe that also the same is for other type of skills. And so can we perhaps hope and expect like more focus on that going forward from a new perspective?
I mean, you can certainly expect us to keep up the pressure. We're also not that far from another Italian Prime Minister's report, Draghi, on competitiveness.
Absolutely, yes.
And so there we also expect that there should be a significant element of the recognition of the importance of skills and the skills of our economy to our prosperity overall and our ability to maintain our European social model, which I think, we can be rightly proud of.
Thank you very much. And of course, on the EF side, we also stand ready to maintain our commitment list for the part related to investment and instruments in this respect. So thank you very much. Let's give a round of applause to our panelists.